There we go. All right. You'll see this image finding the stops, but the reason wasn't to create and add it to branding or anything. Most importantly, was the connection that I have to make between puking and stops. That connection has to be made because in order to understand this, it has to be as simple as measuring and cutting is for a carpenter. It has to be. All right. And there can't be any thinking involved. It has to be reactionary. And you look at this top, it says the puke. You have to know what it means. And if you don't know what it means, like back of your hand, it ain't going to be helpful. Don't even bother trying to use it. All right. So the connection starts with the word puke and how it has to do with stop orders. You've heard me do, and I've done stop order types in previous sessions. What is a stop? And I don't want to spend and waste time going over what a stop order is. But in a nutshell, it's simply what people mostly use to get out of losing trades. All right. Not always. You know, I always get some guys say, well, you could also use to open a position. Most people use a stop order to exit a position, and usually for a loser. All right. Stop orders, stop loss, stop limit, stop market, all that stuff. So if indeed you're exiting with a stop order and you are closing a losing position, the word puke was slang back in my trading floor days to reject something. You rejected the trade, you puked it. So it's slang for exiting a trade and mostly for a loser, just like a stop order would be used for. And you guys know that. Everybody in here who's traded for any period of time knows what a stop does and how you use it mostly, right? So you got to know the correlation between the word stop and the word puke and understanding it's the exodus of losing positions. And then you also understand how markets move, the market dynamics of what makes price move. There's several videos that I do on all that. It's people exiting a position that get the chase on, and once they exit, it could go lower. So when someone is short, if a lot of people are short, they chase price up, they exit, and then it goes down. If indeed a lot of people got stopped out of a short trade at the right or at the same time. Now let's go into some algebra, and I'm just going to draw this stuff and then we'll get into the chart. And I just want to explain one sliver of the three vertical lines that are on the screen share with David. And then I'm going to bring him in there to explain it a little bit as well, or answer questions. The algebra, back of your hand. I don't think I could say this enough. If you have people who are short, are they buyers or sellers to exit a short position? When you're short, are you a buyer or seller to cover it? And I want people to put in B for buyer or S for seller. What are you if you're short to cover a short, buyer or seller? Anybody gets this wrong, nobody did, we got to send you back. And that's fine. At least you know it's wrong. When you're a short, you're a buyer. Period. End of story. So if there's many shorts, we'll call it more shorts, MS. It's safe to say there's more buyers, MB, correct? If this is true, then this is true. Done. We know that. All right. Well, let's move on. If indeed you get or see or identify shorts puking, then there's less shorts, right? LS, less shorts. Well, if this statement is true, then less shorts equals less buyers would have to be true. You don't have to be a mathematician to agree. If more sellers equal more buyers, then less sellers equal less buyers. Again, as Dorian put it, the governing principle, as he explained what he learned when he came into the edge community, the governing principle of what makes markets move. We're just talking about it from the short side. All this is true if you're long. If you're long, are you a buyer or a seller to get out? You're a seller. And if there are more longs, many longs, there's more sellers in the market. If there becomes less longs, LL, it's safe to say, then there is less sellers. If this is true, then this is true. And if this is true, then this is true. Now, the Puke idea or finding the stops have to do with the moment we could, with decent probability, could find this layer or step in the progression of when there's less longs, there's less sellers. All right. If longs puke, let me clear up this illustration. If longs puke, and by the way, is my mic on? Yeah. If longs puke, let me write it out. If longs puke, there's less of them, right? That means there's less longs. And we already know less longs equal less sellers. Now, let's just be super simple. If price is right here, this X, and we know, where is it on the map? What did it just do? It just went down, right? Reading a chart 101 when you start my community, follow the rotations, so the market just went down. It started here and now it just went down to here. Who's taking heat? Who's pissed off? Longs or short? When price moves lower, who's mad? Longs or shorts? Put an L for longs and S for shorts in the chat. When price moves lower, who's more angry? Longs or shorts? Easy. It's not easy for most of the rest of the world to answer that question. It is easy for you guys. Of course, longs are more pissed off. They're taking more heat. I don't give a crap if they're long from, if price is right here. Let me redraw this. If prices just went down, I don't care if they're long from down in here and they still have money into it. Price just comes down, they've seen their profits diminish. They're mad. If they're long from up here, they're really mad because you're down money. We're down money if you're long from up here and you take nothing but heat. So it's obvious that longs will take pressure when price moves lower. They'll be more angry. So they're ready to puke. When longs puke, it's the scenario of them saying uncle, them saying F it, screw it. When one person does it, and it's anecdotal, doesn't matter. If we work on finding where a lot of people puke a long position, we just fill that progression of less longs equal less sellers. And this is important in context. If price moves lower and you see this puke indicator light up, and the assumption's pretty accurate that there are less longs because they just puked and they just covered, they just got stopped out, all the sell orders above that they were trying to use to get out do this. They go away. So think of trees in a forest. If there's a lot of trees standing in the forest, it's hard for price to get through it. But if you're able to remove a few of those trees, it's easier for price to navigate through it. We've already established that when you're long, you're a seller. Well, if you sell it and get stopped out for a loser, then you're no longer a seller above. Remember this connection. The connection between a sell, stop to cover a loser, and a resting, we'll call it RS, resting limit order, sell to get out. If you're long, you usually have two orders connected. You have a resting sell order for the winner, or you got the sell stop for the loser. Well, if price comes down and stops your ass out, this one goes away. And if we created the dynamic of seeing where this one goes away, then there's less sellers. Less sellers, the price of anything has a better chance of going up. It doesn't mean it always goes up. It just has a better chance of going up. Shake out. The boat metaphor. You gotta create an environment where there's less longs for price to rally. So when you or I or many of us, and remember, these are thousands and thousands and tens of thousands of traders and ideas, not just our group, but not just our group would affect it, but thousands of people. If you're looking to get long, do you want a lot of other people long? Yes or no? Let me ask the question again. If you're looking to get long, well, don't answer that. Don't answer it. Don't answer it. If you're long already, do you want a lot of people long with you? Yes or no? If you're long, do you want a lot of people long with you? Yes or no? The answer, and almost everybody got it right, is no. I don't want a lot of people long with me. That's competition. Remember, we just established if a lot of people are long, more longs, there's more sellers. If there's more sellers, it's hard to go up. Too many trees in the forest. So we want less longs. We don't want many longs. You want the competition if you're going to buy the girl a drink? You want 4 people buying her a drink? No. It has to be back of your hand stuff. If you're long, you want a minimal amount of people along with you, because then there's a minimum amount of sellers above the market. Just think of a dome, right? These X's are sellers. If you can get these X's, the more X's there are, the harder it is to go up. But if you can get some of those X's to go away, it's easier to go up. So you want longs to puke. You want longs to get stopped out. To create less sellers, LS, less sellers, the price of anything could go up. Less supply in oil. Think about the story the last couple days in oil. There's too much selling. There's too much production, which is barrels of oil. Those are sellers. There's too much of it. If all the oil companies said we're going to produce as minimal as possible, you just remove supply, price could go up. And price would go up, at least knee jerk, price of oil. Supply and sellers, same concept. Right now, you got too many people long inventory, which means too many sellers. But let's not get too deep into that analogy. I think the progression of more longs, more sellers, less longs, less sellers is starting to become back of your hand stuff for everyone in here. But don't kid yourself. It's not back of your hand stuff for 95% of people who trade. And if you don't believe it, just think about yourself before you were introduced to it. I'm not saying I gave an epiphany to everybody who's ever come to me. I'm just saying most people have come to me, never understood the concept of after you buy it, you're a seller. After you're long, you're a seller. So just remember, it's good that 95% of the people will never come to this understanding and this dynamic. To explain to you the puke indicator without explaining all this stuff would be a disservice, even if you understand this stuff. You got to understand it so it's quick and it's just natural. You could cut the base of a tree. I was looking at how they chop a tree down, tree felling. Wouldn't even, and then I seen it on YouTube because it was, why was I searching? It was something that came up because it was, but it was fascinating how it's not just where the tree lands, it's how it lands. And that's important because they want to preserve the tree for logs. They don't want it broken apart when it hits. So it's not just important for where it lands. You don't want to fall on a house, but it's important how it lands and different cuts. It's not rocket science, but there is a high level of expertise. And once you figure it out, you could start saying, I get it, I understand it. But you couldn't go with a chainsaw and just hack away and think it's gonna fall on you. That's this stuff. And this is the 101. All right, so what's important in understanding, you have to know what it means. What's important, step one in understanding about a puke is, where on the map are you? All right, where on map? Where on the map? I ain't gonna spell it out. Where on the map are you? Map. If price is going down, are we looking for longs to puke or shorts to puke? Give me an L for longs to puke, S for shorts to puke. Price is going down. What are we looking for? Longs to puke or shorts to puke? Longs to puke. Exactly. They're the ones taking heat. When we see it, price should go up or down? When we see longs puke, should price go up or down? Up. Great. It starts to key in and highlight better location, which has always been. Go back and watch any of the videos I've ever done in my whole life, and I probably use this word or this concept of location is always the most important thing. You could have the best opinions and the best ideas in the world. If your locations suck, you ain't gonna make money. You could have crappy ideas, but if you have awesome locations, you actually could get by. If you have both, now we're talking. But location's important. You don't want the nicest house in a crime riddled neighborhood. But if you have an okay house in an awesome neighborhood, you have a better location. Hold on a second. I like how these guys are, people are sending jokes around about the coronavirus, but the text messages are ones that I seen a month and a half ago. Some of the videos and stuff that goes around. I like it when people are late and think they found something funny. All right. Bad timing, right? Their timing is bad. All right. That aside, I had to turn my phone off. I didn't know I had it on. Location's always more important than anything else. What this gives us is the ability to find a good location. In this case, in this example, to do what? If the market's going down, another quiz question, market's going down, we've established we're looking for longs to puke. If longs do puke, it means less sellers, LS, and if there's less sellers, we should go up or down, up. Great. So this dotted line should at some point be the next move. So therefore, we're looking to execute a what? Bullish opinion, right? Exactly. A bullish opinion. We're looking to get long after other weak longs maybe get out. And this is the point of, when you're looking to fade, every strategy that buys a pullback is fading. Fading is not just markets getting hit and going down and you buy it. It could be actually going up and you're fading the pullback. Think about that, right? So think of this move right here coming down. You're fading that retracement. Most people think of fading or is just markets getting destroyed and you look to buy it. Yeah, that's fading also. But you could also fade a retracement to get on board direction, continuation, a trend. All right. So I think we understand it. We get it. And again, puke is slang coming from the trading floor to exit a losing position. Stop orders are generally used to exit a position and generally one for a loser. When a lot of longs puke and get stopped out, there's less of them, and less longs equal less sellers. Less sellers equal a better chance to go up. That's all, probability. Now let's go to some game footage. And let me bring Dave in. Sorry, Dave, for making you wait. You still there?
Yeah, I'm here. No worries. I was just down picking up that long at 26, so no sweat.
Longs for puking?
There were some longs puking down there.
So I don't want to get into this middle vertical or this far left vertical for today's session. There going to be future sessions. Dave is doing some experimenting with this line, which is pretty cool. And you've heard me ask him questions. We talked about icebergs a couple weeks ago. We talked about the big orders last week. And so now we're talking about this puke. And we're going to focus on the far right vertical on both charts. Now remember, on the top chart is the same as the bottom chart. It's just zoomed in and out. These are bars on the top chart, and these are footprints. And so you can drill in like a microscope at the bottom. Both charts of the E-minis. All right, so understand that. Also understand that the instances of when you see red and green flags or bars here will be the same here. They'll just stay up here longer than you'll see them stay up here. All right. Now, let's just get into the simplicity of when you see, what does it mean? When you see it red, it means that shorts puked. And so shorts puke. And when you see green, it means longs puked. Put crosses through them. So going, and again, don't use that. And for now, don't use this. Just focus on the far right. If the market is going down like it does right in here, and then over here, you see a green bar stick out, you could accurately assume that longs, enough of them, puked. And when longs puke, we know there's less longs. And when there's less longs, we know there's less sellers. I can't say that enough. And if there's less sellers, it's easier to navigate up. I don't know if that happened when we came down here. I don't think it did. But that's what you would see. Again, where are you on the map? You're looking for, on a move lower, longs to puke, and on a move higher, shorts to puke. So on a move higher, you're looking for this bar here to stick out red. Or same thing down here, far right, vertical. And let's just say it come to fruition here. You get a little bit, this is similar to this middle one, and we'll explain it at another session, is similar and is connected a little bit to this far right one. All right. So when you see it come out green here, it is giving you a sense that longs are puking also. But that's what we're looking for. We're looking for some longs to puke. Don't get into how big does the bar have to be? If it's a little one, does that work? Those are not good questions. Those are questions that are taking down the wrong path. So I'm not going to answer them. Nobody's asking them, but don't think of it. Yes, it does. So let me read this question, and I don't want to go deep into this answer because it's going to confuse people. The green bar signifies heavy selling. Yes, but the reason why we make it green is to make it intuitive that longs puked. But not just heavy selling, Ron. There's another dimension to the selling. It's not just heavy selling. selling, but not just selling. There's a connection between the selling. There's a connection between the sell order. And the exact math, code, everything else is irrelevant. If you watch it and it helps you, it's the best thing in the world for you. If it keeps you out of trouble, it's the best thing in the world for you. And now nobody's asking me the exact reasons for how you know. All I know is that the right questions are asked in the progression of what happened after the selling came in with something else. That's someone potentially puking a position, and in this case, a long position. Therefore, there's less sellers. That's a good way I'm going to explain it. I like the way Nick just said it. It's the kind of selling that makes other sell orders disappear. How we get to that conclusion is, are you a biochemist? What do you care? If the vaccine works, take it. You don't need to know how it gets made. That was actually a good analogy, Dave. So let me get to some of the questions. But right in here, you get a lot of selling that comes in aggressively, maybe some longs that puked. This is just happening here, and we got a little upside. But you get some longs that puke in here, and you're getting a little upside. And is it a chance to, just muted myself. Is it a chance to call for a bounce? In and of itself, not really. You got to use other context. But as you guys have seen in the trading room, it offers a great probability. All right, let me, I'll ask you a question, Dave. Do the bars, now we're just going to go on the far right vertical. That's all we're talking about. Do the bars on the vertical only represent what is happening in the last price bar?
No, it's time-based. It's the last, on the bottom chart, it's the last 2 minutes. And on the top chart, it's the last 6 minutes. So the in the PNF, you know, they could go that long, but they generally don't.
That's how I would answer it. So that means I understood it to be the same. That's good. Let me read this one. No. Question is, when longs puke, means they sell it before moving to clear the path, so that selling should send it down. They sell it, they're out, and they're no longer trying to sell it. Don't overthink it. When longs puke, there's less longs. If there's less longs, there's less selling. If there's less selling above, better chance to go up. Stan, it's almost like you could use it for that, but you might be overthinking. It says you want to see someone puke, followed by some more people puke, and then therefore, I think that you could use it to see a layer of pukes that come in, but you're looking to give yourself a reason, the fire and the ready aim fire approach. First thing is to just understand that there's a connection between a green bar showing you longs are puking. So you should have better timing of what should happen. Ron? No. Another question, Dr. Raj. Do I react? No. So the question is, do I react to every puke or does length of bar matter? Length of bar matters, not scientifically, but the length of the bar matters. That means more longs are puking. but I'm not just buying every time longs puke and selling every time shorts puke. No, it's just a qualifier. Does that answer your question? Tell me, someone said they finally understood that. What was it that you finally understood? Because the repetition mattered, and I want to repeat it even again for others that didn't understand it. What is it you just understood? What is it that just clicked for you? John, I don't know what you mean. How do I get it to go down? What do you mean? So what an individual said clicked for them is less sellers makes it easier to go up because no one is then willing to sell at lower prices. They're done selling. They're gone. When sellers sell, they're gone. Then therefore, they're not looking to sell anymore above. We've established when you're long, you're a seller. If you already did your selling, you're no longer in line. The line is shorter. It's good that you don't have easy, clickable light bulb moments because most of the rest of the world that never comes to this understanding will never get it. I don't know that, Bill, because there's a lot more involved to it. You got to remember something. If a green comes in and it doesn't call the bottom, that doesn't mean it doesn't work. That just means there was a lot more sell pressure to come, or else you would be able to create that. And that's one of the problems with people that try to create automated strategies is there's so many different things involved on different days that would change it. A little bit of longs puking could make it rally quick on one day, and then it's just a weak day. So then you get a lot of, you're going to have a lot of longs that puke that can't get price to bounce because it's just a weak day. When people are looking for, and I'm not saying you're looking for it, we're human. You got to catch yourself for looking for the more scientific numbers of results on how much something works, because what you're trying to do in that respect is use that to eliminate fear. So it's like a fight. At some point, you got to be able to not be afraid to get in the ring and fight. You can't know the certainty of, I know I'm going to beat this guy. I've got an 80% chance to beat him because he's not as tough as I think he is. Hey, that's not going to remove your fear. And I'm not saying you're saying that at all. But as humans, we all try to find easier ways to drop the fear in pulling the trigger. And a sense of certainty will do that. But a fighter never has a sense of certainty he's going to kick the guy's ass. He's going to be fearful. If he's too fearful, he'll get his ass kicked. He'll be paralyzed and won't be able to fight. If he's not fearful at all, he's not human. But it's that balance of not being certain you're going to kick the guy's ass, but having some probabilities, relying on your training and turning things into confidence, which create consistency. And again, I'm glad you asked that question because it's not you, and it's not even what you were implying with that question. But I know as a human, everybody follows that path of least resistance, where to create less fear, we want more certainty. This isn't a vaccine in a sense where there has to be some really stringent molecular matter that lines up, or the guy dies. And I know I'm botching that analogy up, but you get the point. There has to be a high level of exactness or the building falls down. Another question, and I know these questions are all good, by the way. And this is the most questions I'm getting about really anything. No. So someone says in here, this is like a common, it might be a common error, and we got to clean it up. Someone just said, for me, less longs equal less shorts. No, it's that has nothing to do with each other. Less longs equal less shorts. I don't know. Maybe they're two different people. Less longs don't necessarily equal less shorts. Less longs do equal less sellers. In the case that if those longs were not removed, their sell order would not be removed. So you start off wrong, and therefore everything past that is going to be harder to understand. Less longs equal less sellers, not shorts. Less longs equal less sellers, not less shorts. Two different things. Sellers and shorts, longs and buyers often could be two different things. Yeah, I know you got to buy it to get long, and I know you got to sell it to get short, but you've already done that. You're short, you're now a buyer. What are you now? So I think this is a confusing part for anybody that's in this business, is long and short, and then there's buying and selling. When you're long, you already bought it. When you're short, you already sold it. So the short is now the buyer, and the long is now the seller. So there's less longs, there's less sellers. That's the connection that goes against a lot of intuition. So this is something we don't see a lot. So I'm kind of glad it came up. A lot of shorts puked, but the market moved lower. We don't see that a lot. And I don't know a ton of what to make of it. I don't play it. Would you agree with that, Dave? Well, first of all, you don't see that a lot. You don't see shorts puke a lot after the market moves lower.
Yeah, what I think, I've got a theory. I've been watching those, and what I think is that's guys that were potentially opening a position instead of closing one.
Especially when they're stacked, right?
Yep.
Yeah. And that stuff we're working on trying to create with just advantages or probabilities. But I'm glad whoever brought that question up. It's just something you don't see, because we want to see shorts get squeezed after it's rallying, and as long as it gets squeezed and puke when it's breaking. Someone else says what clicked for them is less sellers means less resistance above. Whatever works for you, because that's a true statement. Less sellers, less resistance. Less sellers, less resistance. Less buyers, less support. I'm reading questions as I'm going through this. So right now, just so you know, there's a buy iceberg that lit up here.
Yeah, he moved down. He was on 19 even, and then he pushed it down to 17 even after he's done 311 so far. But he moved down. He's showing one.
And again, it's hard for me to jump in here and tell you what I think. Generally it's a magnet of pull back. But as I'm doing a presentation and reading questions, It's not like the trading room. In the trading room, I'm more focused on all that's going on and around you, right? So you got to have additional context. For crying out loud, I mean, I look up and say, well, we are a lot lower than I look, and we're 88 lower. We're 3.5% lower.
And that iceberg that came up at 18 quarter was a new one, not the prior one still sitting down there.
Did he get some? No, they came one tick below, above him rather. But the magnet buyer run away from it.
Yeah, I tried to click that and just missed it. That's kind of frustrating. But yeah, you got the what looks like shorts puking again. So I really think that's guys initiating. I mean, they're buying it. They're buying it to initiate instead of close a short.
And then they get stuck and they're like, uh-oh, because that's important to know too if they're opening a position. All this stuff has really been to give you guys a sense of where this came from. This is the concepts and the techniques that are used are never changed. It's just always a better way to see the same thing. And this Puke tool came from Dave being able to, over the last couple of years, has done a lot of work pulling in data and being able to disseminate certain ways. And it simply came from a conversation of, can you pull this? Can it show this? Yes, I think. And it's just that was that collaboration by the both of us for this tool to say, well, then present it this way. How about that? And remember, we changed a couple of things, Dave, and we were showing too much noise. And then
True. Yep, just trying to improve it.
And it was that true overlap.
Yeah, I remember the first idea was it seemed like a good one, and then I had the answer to the puzzle and couldn't make it work. Like, if you can see, if you got the picture of the puzzle on the box, and you still can't put it together, it probably ain't gonna work.
Right.
But then there was the follow on from that. Hey, we can do this.
But when I heard you say that's fascinating, when I was asking the questions, I'm like, I knew I triggered something as far as what we could do with the data. It's not so much. It's about getting closer and closer to answering the question: were they really long and did they really puke? Instead of less probabilities with just delta. You know what I mean? Or just aggressive buyers. They're buyers. They're buying. And then we're using some skill to understand if they're buying to cover with probabilities a short or buying to initiate a long. And I think that, and I come to these conclusions as I talk and deal with people and read answers and read questions, is this: how to use it is not even close to people should worry about if they don't understand less longs, less sellers, we could go up. So like until you understand that and it clicks, then why move on to how to use it? You're wasting your time. And someone else just said they had another aha moment when I did this. So I'm going to do it again. When you're short and when you're long, means you already bought it when you're long. Means you already sold it when you're short. So the whole notion of a buyer and seller, which is over here, are flipped. When you're short, you're a buyer. When you're long, you're a seller. And I did that earlier. In fact, two people just said they had some light bulb moments. So I wanted to put that up there again. Scott, I'm not understanding the question. Like for the right, so most bar at the bottom has a red and green for the same bar. What is the takeaway from that? I think we kind of addressed that. I think you asked that before Dave went into potentially opening a position when we see reds at the bottom or greens at the top. You don't see it a lot though.
But when you do see it in the right spot, it seems powerful, and that's a perfect example of it right there.
What's important to know from this, without telling you exactly how Dave has pulled this in, is it's real orders. That's it. That's how I'll tell you. They're real orders. Size, price, person, just like we talked about icebergs in 2 weeks ago. That's a particular order. Dave knows how much he was showing, 7 at a time, how much he ended up doing, at what price, if it was moved, if it was the same guy. And so it's the same concept and techniques in used to finding whether or not they're selling to exit along or just selling.
And the scale of this thing, just to give you a little hint, between 8:30 and 8:45, and I haven't checked since we've been in this volatile period, high volume, but typical volume, 2 months ago would be somewhere north of half a million ticks would come out in the first 15 minutes. So 8:30, 8:45, north of a half a million ticks. So that's how much data is getting crunched to figure this stuff out.
So it's efficient. You're not only pulling in the right stuff, you're pulling it in efficiently.
Right.
Is that fair to say?
It is. Got to do it to be fast. I mean, it's massively parallel. It gets spread out across all the different processors. So that's why it's so quick.
Here's the other thing with a tool that, and I'm talking to a group of guys that have been, this is a coaching, that have been in the edge community for either a little bit of time or a long time. I'm not talking to the masses. If I was talking to the masses, I'd get aggravated with people and not aggravated with people, but they don't know me. If you don't know me, they're going to question, well, they should question that if you don't know someone. There's a lot of stuff that's crappy out there, but don't take my word for it. Come in, look at it, see it, and see how it works for you. Don't take my word for it. See if it helps you. Therein lies the value. Just like anything else, don't think it comes out red, I could sell it. Sometimes you can. You got to be consistent in what you're looking to do. Like it happened here, and I wasn't paying attention, so I don't know the concept, and maybe it came out and didn't work. But I mean, if you're looking to sell it and it's coming up, it's like the time for it to turn and go down is ticking. That's what's important. It's not the exact price. How much heat do you take? It's like, is the time's ticking. The ball's been snapped. The defensive linemen are coming after you. You got to throw the ball away. So if you're short, it's got to start going down soon. That internal clock could go. Very interesting question by Nick. Was the red puke signal caused by the iceberg below? Possibly, right, Dave? Was it a red iceberg or was it a buy iceberg? Now I forget.
I don't remember, but no, those will be different.
Yeah,
let's see.
It was a buy iceberg.
It's a buy iceberg. In fact, he's still down there.
Well, he didn't move it, but another one came up and got filled, right?
True. Yeah, that shouldn't. The iceberg won't show up in that.
Yeah. So no, good question, but no. Less tree. Bill says less trees is a great one. Less trees, less wood. Yes, less trees, easier to navigate through the forest. That's what that's what market is. It's a forest of a bunch of sellers above and buyers below. When there's sell stops, which are below, think of a market as a dome like this, right? And the bids are here and the offers are here. And people who might want to buy it are down here and people who might want to sell it are up in here. Well, when there's less of the intent here, it's just easier to go up. When there's less people who want to buy it, it's just easier to go down. But you know what really is fascinating is not just the buyers below, because buyers are below and sellers are above, right? But where are sell stops? Sell stops are below. Those are the hidden nuggets as to where magnets are going to be. They trip them and then they bounce. And I don't want to get into why sell stops are downside magnets because I've done a whole video on that. You got to go get them. And I got to touch on it because I think that it's important. If there's a lot of sell stops, which are below the market, right? That means generally a sell stop is connected to a resting sell order, isn't it? So if there's a lot of sell stops, there's a lot of sellers. If there's a lot of sell stops, there's a lot of selling pressure. And then his price might go down. These guys are saying, shoot, 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 shoot. Stopped out, then it rallies because they did what they did. Just think of it that way. A lot of sell stops, a lot of sellers, a lot of sellers, a lot of pressure, a lot of pressure, a lot of selling. A lot of selling, go lower prices. A lot of sell stops, oh, shoot. And it becomes a self-fulfilling prophecy. And when I say a lot of sell stops, more sell stops than buy stops, right? Because you always get that fight. This is the market dynamics. This is the why markets do what they do. Not that I know of. Is there another way to see less shorts? I mean, not a better way that I found. In order to see this tool, like any tool, you want to see it. I'm just explaining what it means or what it's showing. To see it in the room is where it's fascinating and where it's helped so many people, including Dave, including myself. And it's not just the pukes, it's the big orders that come in that Dave has been tracking for such a long time, the icebergs that he's been showing for such a long, I mean, so, and it's the simplicity of pulling it together to see it and not have to add SHIT onto your screen, meaning I tried to install it, Anthony, and my system crashed. That's what software guys have to deal with. So here's a moment where could you take a shot and buy it because you see this? If you do, you should get this reaction ASAP. It's all about location. It's taking a shot. This green means longs puke. Longs puke, it's easier to go up. And all you're trying to do in this business is work your ass off at getting locations that you take less heat and get some immediate profit. And don't think of it as a scalper. Think of it as being able to swing the bat and foul tip off tough pitches and find one you could handle. I don't want people to scalp. I want people to scalp their losers. I don't want them to scalp their eventual winners. I want to be able to swing the bat. And like, if you're trying to buy it because you're bullish in here, you get a head start. So you could trade so much more like clarity and less fear instead of it being random or every time you buy it, you take heat because that would suck. If every time you buy it to get long, you take heat, that sucks. Man, look at these messages that are coming across. I have to, some of them are just, comments on the market. Let's see if we find some questions. Good way to put it, Michael. Every trade's a scalp until it isn't. Every pitch is not supposed to be driven off the wall, but you have to address it. It doesn't mean you have to buy every move lower, sell every move higher, but you're reading the market. You're addressing it. I don't have an opinion. I don't know what's going to happen. Or if I'm looking, what do you hear me say? This is the move up. If this move is powerful, it's going to get retraced and bought for this continuation. Maybe that's part of what I want to see to pick a location to be able to hold on to something. And that's the trade that could make your day because you get a head start and then you get a runner. And maybe you get one of those a day and it makes your day because you're not getting your ass beat every time you're wrong. And so if you have 5 trades and 4 are losers, the one winner could either make you even or get you up. And I don't want to use percentages because someone might ask, Would that be 90% or 80%? You get the point. You're going to fear less when you're getting head starts. That's why it's a great, the guy who brought this up, and I'm not picking on him, I'm glad you brought it up. It's what I tend to think. We're human. Humans tend to want certainty. We all do. If you're a human, you want certainty. We all go there. So the point is why it would be an unfair question and you're going the wrong path of how often does it work. The answer is, well, what's your definition of work? How often does it work? Meaning like just now? Wrong question. The question is, how often does it work for you picking locations that you don't get your ass kicked every time you buy it? In this case, to get long. How often does it work could be defined as, does it give you a little bit of a head start? How often does it work to, once you buy it and it doesn't go, you get out before you get your ass kicked and it goes lower? So the definition of how often does it work could have 7 different definitions and all of them are correct. How often does it work is always connected to, in this business, does it give you better timing and location? Does it strip out the randomness? Because then it works 100% of the time. If it's stripping out the randomness for you, it's working 100% of the time. And it has less to do with losers and winners. It has everything to do with fear and confidence. Because every trade is unique, every day is unique, every person's unique. And therefore, you can't just throw it all in a bucket and say, what are the probabilities going to work? Well, I got 7 different definitions for what work means. And everybody in this webinar thought about that question. I wonder what the percentage of it working is. Everybody, I bet, thought that. If you're human, you probably thought that somewhere out front or deep down subconsciously. That's what we do as humans. We go to, I don't know if I should go up and ask her if she wants a drink. What are the chances she says yes? Hey, you send a friend. See if she likes me. Hint around. Because you want certainty that if you go up there, she's going to be receptive. Right? God forbid you went up there and she showed no interest, because that would be terrible.
Yeah, send your friend so he can get married to her.
Yes, send your friend, see if she likes me, and then he's kissing her. Thanks. That's not a good friend. I never liked guys like that. Never hung around with guys like that, and if I did, I didn't hang around with them long. And with girls too. There's no loyalty. There's not. I tell my kids, if you don't have friends that are loyal, then you don't have friends. Trying to, Scott. Excellent. That's part of what we're working on. Good question, though. All right. It could be, though. So question is, it's not signaling a reversal or fade as good or better info as when it does. If I understand that question, and I think that's a combination question statement together, it does a great job in signaling tops and bottoms. Temporary tops, top of a range. It just does an excellent job at giving you a better timing mechanism of when you should get short if you're looking to get short. When and where. Like that particular instance below where a lot of longs puked and it called the bottom. I mean, you'd be crazy to try to find it work every time like that. Yeah, maybe when there's a lot of them in context, it works a ton that way. But you're not trying to use it for it to always work that great, or you're going to be disappointed in any tool you use. Hell, you could have the best tool of all, and that is certainty how many longs and shorts are in the market. And that wouldn't work 100% of the time. Meaning, and now I'm not saying people are looking for something to work 100% of the time, but there's always the context you got to add to it. This goes into if the CME came to you and they said, hey, we're going to give you any data you want. What is it you want? Most people wouldn't know what to ask for. If you don't know what to ask for, you don't know the biggest and best edge there is.
Much as they're charging now, they ought to give us everything we asked for.
I knew you were going to say something.
That was T-ball right there.
You gotta, everything that's worked on and everything that the progression of anyone's trading has to be looking at, like when someone says, when someone says, I've got this opinion and profile, and then I look for order flow. And it's like, okay, what do you mean order flow? What in order flow are you looking for? Do you even understand what order flow could be and how it could help you and what it tells you and how different variations of it could happen? And most people don't. And most people who try to educate on it don't. They don't get the ultimate result of, after a lot of selling comes in and it's done, we're going to bounce, snap back. You get a bunch of buyers that come in to chase it up and we're going to go lower. And if you can't find that because they do a good job hiding it, then you got to search around for why they're magnets, what people are doing ahead of it. They're orders. Every part of order flow has to start with orders. And guess what? They buy third-party software and they get into some really deep order flow analysis, but yet they don't know the less longs equal less sellers. They don't understand the short, long, buyer-seller connection. And yet they are thousands of dollars into third-party software. Any other questions? So again, we're just talking about the last far right column where you had some longs that, like I said, if you watch it in the room, you won't see this a lot. We've seen it twice happen in 30 minutes, but you're seeing some longs or shorts puke. They just started filling out in here. You got the top of this range. If you get short, you better get your ass out because you got sell stops. So this is what I mean by context. You got big sellers that came in. You got the top of this range that's defined itself. If you want to get short and you take a shot because you've seen this, you ain't got much time for it to go lower, and you better protect and make sure you're out before they jump. But your best shot to go lower is now, so it should go lower. But you don't, you get this seller to come in and they're really close to just puking them. It's just, okay, comes out and you take it. Not only do you need to happen what just happened, but you better not be greedy because you got most likely a bunch of buy stops above. And those are magnets. And they're going to go get them and then maybe go down. And that's generally what markets need to do. So it's just all understanding your surroundings. I think another flurry of sell stops came in. Not sell stops. Shorts puking.
Yeah, I've been sitting here short for a long time. I feel like an investor.
Shorts puking equal less shorts. Less shorts equal less buyers. Less buyers equal easier downside.
And it's a really tight, the risk is small, but what I'm worried about right now is exactly what you said. You pot is the head fake up to go back down, which is what we may be doing right now.
Now a big seller comes in. This SOB doesn't get it to go down like right now. It's gone. There it is.
Yeah, so there's that happen. Now the question is that just going to be a head fake? Because this is a great spot for a head fake.
all of that just came to fruition, and everything that was just said is not, cannot be, doesn't seem, and isn't random. If I were to say these things and didn't tell you why, you'd probably like me more because you'd think there was some 99% system he had. No, it's the discretion of reading where you think people are in the context of buy stops here. You got the head fake potentially happening. You got this buyer, and then you got some shorts that also puke. That's them getting dunked on. That highlights a better location. I mean, this is everything coming together and moving. But Anthony, I'm looking for 10-point winners. Let me see if I missed any questions here. I think Thursday. I'll get into that in a second. But again, with any tool, answer the questions yourself as to the value and the usefulness for it. Meaning, does it give you better, first of all, not quick and better results right away? That's not the right answer you're looking for. Comfort is the answer you're looking for. Does it reduce the fear and give you comfort into stripping out the randomness? That's value, because then that leads to the best chance at results. People try to equate results right away to value. Yeah, that's certainly a great way to get there quick, but how often does something go from immediate satisfaction? That would be something that works 100% of the time. The definition of value in any good tool and any good idea, do you feel more comfortable and confident to give yourself a chance to beat the guy up? Because most people are never, no fighter has the certainty he's going to win. Stephen, I'm not understanding completely what you're asking. Like, for instance, if I'm bearish and looking to get short, I'd like to give you an example where something doesn't work. But for me, like here, if I was bearish and looking to get short and using this to see where some shorts puked, this gave you a location to take a shot. Maybe this gave you a location. Over here gave you a location, right? What I look to do is foul tip until I could catch that. And do you catch it here? Do you catch it here? And that's me. So it all starts with the question of where do you position yourself in this market? In this particular sequence, if I'm looking to get short, then aim and fire is stuck longs, which is, big buyers. That's one side of stuck longs or stuck buying. Shorts puking in this case has given me a better fire. And I'm trying to be in a position to scalp or small losers when I'm wrong and something left on for when I'm real right or when I'm really right. But Stephen, it goes back to location. Here's a way to work on positioning yourself. Just flip, and don't do this in a real market, but flip a coin and let the coin tell you if you're supposed to play it from the short side or long side. And if the coin says you got to play it from the short side, just use this and other things that I teach as a way to pick locations. Someone's asking me about average hold time. I never found that helpful for me because I'm not going to want to think about, I've had this trade for too long based on my average. Those average hold times are skewed based on once you get a winner, you're going to hold on to it a lot longer. I mean, once you really picked it. I want what I'm seeing in the market to dictate how anxious I should be. Get into that flow. For me, when I get an eventual runner, usually between 5 and 10 minutes, it'll go the distance I want it to go. Which in this market, in this day and age, is anywhere from 4 to 8 points. Now, some guys will make 8 to 16 points or 10 to 20 points on a runner, and God bless them. That's available in this environment. Well, everybody thinks here's a great way. Someone just said it. The more people think for perfect scenarios, the more they go down the wrong path. I agree 100%. But we're all inclined to try to go down the perfect percentage probability system strategy because you don't want to work. Not you, but you don't want to use discretion. You don't want to have to actually put in any time in to read something. And so you just want the percentages to give you the confidence instead of the talent and the skill. The best carpenters, I'm telling you, if you guys don't, I'm always fascinated by people on TV that show here's what I'm fascinated about, that there's always an expertise in everything. And I'm fascinated by what the expertise is. For asking questions to people who don't have to be great at what they do, but if they are good enough to make a living at it, I'm fascinated with what the expertise is in that business. It could be making tools, tool and die, or a physician or a biochemist, or, just things that are intriguing as the expertise into the guys who cut down trees. And I'm not saying I'm going to read books on it and want to meet these guys, but I'm interested in a 10-minute video, how cool it is, the expertise that goes into the thought process. Where I'm going with this is, if you know that the best carpenters and craftsmen in the world, their experience in learning the right way allows them to make the right decisions with the right discretion on a job that they're on. They could explain it as they're doing it, but it ain't something you got out of a textbook. That makes sense? You know who's a really good carpenter? There's that guy from Ask This Old House. You ever watch that show, Dave? It's been
No,
around forever.
that looks too much like work to me.
My wife says, "Why do you watch it? You never do any of it." I says, "Exactly."
There you go.
I says, "I'm just enamored in the right tool for the right job."
So I can learn what I shouldn't be doing.
Hold on. This is a improving trend. That's somewhere where this uptick came in, guys.
Yeah, we just cleared a pretty interesting level there to the upside.
Yeah, look at all this. Since 10:30 this morning.
Yeah, a ton of that. Those 35s were really important because a bunch of the big traders, the 50 plus guys, were all over that. Did a bunch of contracts on those.
So context is understanding all those swing highs, and then that's a lot of why this headline came out that showed some declining in. Was it out of New York? That just come across where it's like somewhere else on the chart, that headline might not have rallied us. But the fact that it ran it into a bunch of buy stops and a lot of shorts saying holy SHIT, it was used as an excuse to go up, right? It's like punching a guy who is leaning on a cliff. He's got a better chance of knocking him off it. He's out, you know what I mean? No balance. The market was off balance.
Well, I normally wouldn't reach for something like that, but having heard the headline and know where we just popped out of, I did. I reached a long damn way to get that. 39 to be exact. I got a scale out of it already.
Now you got some big sellers. If you can just get above there, you get a little push.
Right.
Two big sellers. Got to get creep above it.
Got his own 44. We need to get, yeah, there's the big sellers going. Get past them, then that'll be real good.
So here's another way to use it. If you're long, you don't want to see shorts puke. If you're long, you don't want to see shorts puke. You want to keep their asses in the trade to keep upside.
And you don't want to see big buyers not getting it to go.
Yeah.
And there's a whole bunch of different stuff on this chart. I mean, we're talking about the right column today, but those sellers did not get it to go.
If they could just clear it, they'll have the next leg up. But the whole point of think about that. If you're long, this has to make sense. If you're long, you don't want to see shorts puke. Why not? Because if there's less shorts, there's less buyers, easier chance to go down. And I'm long, I don't want it to go down. You want to keep their asses short. You want to see them crying, squealing, complaining.
What we need right now is a NASI to pop, because that's been leading us. If we get a nice NASI pop, that'll take us up. Yeah, got a little bit.
What was exactly this headline?
Well, it was better. It was just better numbers out of coronavirus, and the way it reacted is what got me to do what I did. And the fact that we got through those 35, 36 range and all this other volume.
Oil is down 45% today.
That is incredible.
Now, I'm not great at math, but that's like almost half.
I think that's exactly equal to a lot.
Maybe.
It's a scientific term, you know.
That's a down day of $9, and it's worth 11. They lost $9.
July's still holding up okay, isn't it? Or it was earlier.
Don't even have an up. Yeah, they're going to be higher the further out, just based on this where we're at. I mean, there's a great disparity between where demand is now and where it should be in 2 months. It's a storage problem. They can't clear what they have. That's the problem. Nobody's using it, literally. It's amazing how you go from as close to zero demand as you could possibly get ever.
Look at all those cells, Anthony. Huh. Well.
No, he's just yapping about the CDC. It appears to be an updated number from the CDC. I don't know exactly what the. Hold on.
Don't know. Trying to decide if I want to keep this last one or not. There you go.
Right in here, tiny little bit of shorts that puked, and then this big buyer as soon as it comes below it. It just has a chance to get hit. Now you got all these sellers. You a little clearance above it, you have a chance to pop back up.
Stuck all those sellers, and look at what we came out of. Look at all that volume that happened below 36.
They're getting it. There you go. That's what I was trying to draw. It's like you don't want to just get a tick or two above. You just want to push that rock. What I want to leave people with, and I didn't start this Tuesday session going over some of the things that are happening this week, but it's obviously oil, and it's obviously something important to watch and anticipate a headline or an event that come across that OPEC is going to cut. And I don't care how long the rally stays intact for, how much you could believe them, because I agree with Tom with, do you believe what they say? The initial knee jerk is going to be a rally in oil and a rally in stocks. But maybe don't let yourself be surprised. Maybe they come across and say, we're cutting to 20 million on May 1st, or we're cutting today, or we got together, whatever it is. Look for a bullish news story to make up for a 45% decline one day in crude oil. The other thing that's funny is that people say, I thought oil was minus $50 a barrel. It went up to
Yeah, they're paying you to
$11.
take it.
They don't get it. People don't understand. And it's not their fault. They don't understand that it was a different contract. Then try to explain to them, well, wait a second, it's still oil. What's the difference? May, June. And then you tell them about, well, it's delivery.
Yeah, you got physical delivery. Hey, I got to run. I got a meeting at the bottom of the hours.
All right, Dave. Thanks for your help.
You bet. Catch me later.
That was This Old House, Scott. Ask This Old House were the guys that would go on small projects. They send a plumber out, a landscaping guy out, carpenter out. And they're all East Coast guys. They all sound like Tom. But they the whole thing about that show, and it's like what I always try to do for people in this room, in this whole business, is the right tool for the right job. A screwdriver is a screwdriver, but they're not all the same. And I don't mean size wise. There's good screwdrivers and crappy screwdrivers. Better way to see the same thing, but then you have to know how to use it. Righty tighty, lefty loosey helps for some of you guys. The best was the watching how to felling a tree. Felling a tree. Watch a video or two on it. You'll like it. I'm not saying you'll like to watch a whole documentary on it, but the key is not just where the tree lands. It's keeping the tree intact. It doesn't bust apart. You don't bust the trunk. That's one of the keys. And guess what else is important? It's having a good chainsaw. So I think you guys get the gist of this whole, the right side of this this tool. The way that this is not something that we're installing on people's computers. We're sharing it in the room and have been. There's going to be, if you want it all day long, there's going to be an option to be able to do that. When it's up and it's available, I'll show it to you. I think by Thursday. That option means that you'll be able to log in to my room and the screen share and see it all day long. Be able to open it up, size it, put it on a different monitor, because you'll be able to float it around like this, like I do. Oh, shoot. You guys ever do that with Sierra? If you shake one window around, they minimize and then they come back. But anyways, you'll be able to float the screen share around or whatever else. But brings a lot of things nice and tight together. And the most unique thing in the world is this right side, is this Puke. When I say unique, there isn't a lot of guys. There's not, forget about a lot of guys. There's nobody that's doing it. I know it. because it takes a little bit of ingenuity. It takes a lot of what Dave knows to be able to pull this stuff in, but then the right questions to ask. If you know this, could you know that? And most of these guys out there, I could tell by listening to them, the guys that have really good third-party software, they don't know enough to ask about this. And so here's a good opportunity, or Shorts Puke, take a shot. It starts to go up a little bit for you, right? And that's the whole key, where you could buy maybe the bottom of it to get paid a little bit. Shorts Puke on a pullback. And even here, see how you get sellers and it couldn't go down? So it does go up, but it comes back in and then it goes up. At some point, you got to wash them out. It's like, how much time are you going to give it for shorts or sellers to be stuck for it to really rally before saying it's got to do what markets do? It's always busting your chops. Here's a great analogy. We're the hitters and the pitcher is the market. It's the pitcher's job to get us out. It's our job to foul off his good pitches, to not even swing at the ones in the dirt until we could find something we could handle. Once it's on your screen, David, all that stuff would be bigger, but I don't know. I'd have to ask. You don't need, that's the other beauty part of being able to have the screen share. It doesn't matter what platform you use. It's a screen share. We're not putting it on your computer. To be honest with you, I don't want it on my computer. I want the screen share to be able to manipulate the size of it, to put it on different monitors and stuff like that. But I don't want right now it on my machine. The screen share option, someone's asking what it's going to cost. I don't know yet. It's not going to be a lot, and it's probably going to be monthly, and it's probably in addition to the regular trading room. And it's only going to be offered to guys that are in the trading room. There's nobody that's going to come in and say, I'll just do this. No. You got to come in through. It's about quality, not filling this in with as many people as possible. So the trading room and edge guys will see an option to do this, to be able to have it all day long, every day, and be able to put it anywhere on your workstation. When I say that, meaning taking this screen here that you see floating and putting it anywhere. And remember, the reason why is because you guys are seeing it on a screen share. I'm sharing my screen, Dave's sharing his screen. You will, if you want access directly into this, you will be skipping a leg. So you don't need Sierra, you don't need Ninja. All you need is your eyes. I mean, I should say you don't need a platform, but it doesn't matter what platform you're using because it's a screen share. Anybody else got questions? It's all about, again, location and understanding, first of all, what it means, but then locations. What do you think this is, Raymond? All right, guys, I'm going to stop the recording here for this session. We went long. Let's see here.